CDG says, I think I saw that the term rider on the Allianz is convertible to base within 10 years or so. What benefit would it serve to convert the term to base on an IUL? That's a great question. And I asked the exact same question from the regional director. And the answer is there is no benefit to the client for converting that base. Because, and this was the reason I asked, why would I want to convert? What exactly am I converting? Because it's all annual renewable term. It's actually the exact same kind of insurance. So what am I converting? And the answer was nothing. Some agents may want to design it to convert. There's different ways that an agent can choose to take their commission. You can choose to take your commission in 1 year, or you can choose to take your commission over time. And if an agent chooses to take their commission over time, they can design that policy to have a bigger supplemental term and then convert it each year, thus giving them the full commission that they would have otherwise got each time that gets converted. So the only benefit to converting is to the agent who takes their commission over time. It just gives them more of a payout. And what does that do? When I design a blend, when I design that maximum blend, and I compare that to that maximum blend where I convert it over time, the one that converts turns into less cash value. So, no benefit to the client, benefit to the agent. I don't know why they do that. It adds a little bit of a complication in there, but something to watch out for. Just know as a client, there's no reason. There's no reason to convert it. The term insurance that's part of that supplemental term, it does not end. It's not a level term. It doesn't go away. It's the exact same kind of insurance. It'll be around as long as you keep making payments on that policy. So hopefully that helps. A1 says, thanks for the great info. How do you address the common objection, you lose your cash value when you die? Good question. You don't really lose your cash value when you die. That's the problem. If you look at, let's say, the argument's a little bit different if you go whole life or IUL, but in nearly every case, if you have an increasing death benefit set, there are some whole lives that you can see an increasing, even with the blends that we do. And there's IULs where we can do a level or a option B death benefit, which is an increasing death benefit. You have a death benefit amount that you pay for. That's the cost of insurance in your policy. In the IUL, all of the cash value that grows adds on to that death benefit that you're paying for. So if you look at the illustration, you do get all of the cash value and the death benefit that you're paying for. Now, if you want a higher death benefit when you pass away, pay for more death benefit. If you use a level death benefit, which some whole life insurance policies look like when we do the blend, or a level death benefit on an IUL, you're not going to see that death benefit grow as your cash value grows. But what happens behind the scenes there is, as your cash value goes up, the amount of net amount at risk, the amount of death benefit that you're paying for, goes down. So you do, in nearly every instance, you get the cash value and the death benefit. It's just a matter of how much death benefit do you want to be paying for. But the death benefit, when it pays out, is a mix of the death benefit you paid for and the cash value that you've built up. It just all goes as a death benefit to your beneficiary so that they can get it tax-free. Make sense? That's what I tell my clients, because I do get asked that regularly. It's a good question, and I love to show them how in the illustration, look, the death benefit actually does go up. And what you're paying for does not. It's going up because of that cash value.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.